What is up, everybody, and welcome back to the Everything Crypto Show, where we keep you up to speed on the most important news moving the crypto markets. Now, we are back today with an urgent daily market update as 3 crypto banks are in trouble. 2 of them have already confirmed bankruptcy, with a third one that is crashing on fears that this bank will also go insolvent. And the problem here is that Circle, the issuer of USDC, has been confirmed to actually hold cash with all 3 of these banks. Now, this has caused USDC to crash here over 8.68% in the past 24 hours, losing its peg from $1, currently sitting at about 91.32 cents. Circle, as the second largest stablecoin in the world, this is going to have massive implications on the crypto market that we are going to break down in this video. And we've also seen Coinbase here temporarily pause the conversion of USDC back to USD. This means that if you are holding USDC, you are stuck with this not so stable coin anymore. And I do think that this is going to really cause a lot of issues moving forward in crypto that we are going to break down in this video. So definitely one you do want to pay attention to, especially if you do have any of your money in stablecoins or on a centralized exchange. So without further ado, it is time to sit back, relax, grab that morning cup of joe, and enjoy the show. Now, make sure to hit that sub, like, and notification bell if you have not already, and join the Everything Crypto Squad. And with that, we're going to hop right in here with the question of the day. Today, I want to know, do you think Bitcoin will revisit the lows at 15.5K from last year? Let me know in the YouTube comments down below. Now, as for the charts, I mean, we do have Bitcoin actually coming in, retesting that 2018 all-time high at 20,000. We did briefly break above it here on the weekly candle, and I actually did see this happening even well before the collapse of these banks. You guys may remember, if you have been watching our videos the past couple of weeks, that we actually spoke about Bitcoin coming in for a revisit of this area after we got rejected 2 times at 25K on the weekly candles. This did also coincide with rejection at the 50 and the 200-week moving average, 2 key areas for Bitcoin that I do need to see a break above before I do consider us looking bullish here in the crypto market. And if you do want to kind of get a better understanding of why these areas are so important for Bitcoin to break above, I'm going to bring us to a log scale here real quick. And if you guys take a look at the yellow line, which is the 200-week moving average, you're going to see that historically it has acted as a very strong area of support. So back in 2015, Bitcoin bounced off the 200-week MA in and around the $235 level, and then rallied in 2018 all the way up to 20,000. Once again, in 2019, we saw Bitcoin hit the 200-week moving average in and around the $3,500 area before rallying up to 14K. And then here in 2020, during the flash crash that nobody really saw happening, we actually saw Bitcoin break below the 200-week MA on 2 weekly candles, but managed to close above it on both of them, validating it as a level of support. And this did bring us to the most recent rally in the 2021 bull run up to $69,000. So clearly the 200-week MA is a very strong area of support for Bitcoin on the chart, and this did mark the first bear market Bitcoin actually broke below it, and that is why we are now having a hard time getting ourselves back above it. So 20K was already on the table before we had the banks collapsing, and this has pretty much just sped up the move to the downside that we were already expecting. Now, as for Ethereum here, similarly to Bitcoin, retesting that 2018 all-time high at 1400, we are currently sitting at 1438, and Ether, unlike Bitcoin, the big difference here between the two of them is that Ether is actually above the 200-week MA, but also getting rejected at the 50-week moving average. Once again, identical to Bitcoin, 2 weekly candles getting rejected at this level, but it is actually validating the 200-week MA as a area of support. The 200-week moving average for Ether is currently sitting at 1429. So both of these cryptos currently revisiting the 2018 bull run all-time highs. If we do break below these levels, that is when I think it could get very ugly. And if we actually do see that, if we see Bitcoin go below 20,000, I do think a revisit of 16.5K is back on the table. And if we do see Ether break below 1,400, I think $1,000 will be coming up next for Ether. Now, taking a look here at cryptocurrencies on the week, I mean, you can see based on the crypto bubbles, like Bitcoin down 10.1%, Ether down 8.7%. And if we bring this out here to just all cryptos on a weekly basis, I mean, doesn't paint a much better picture, guys. We got Litecoin down 25%, OKT 22%, ApeCoin 22%, Crow 13%, Dash is down 33%, AVAX 15%. I mean, pick your altcoin here, and it's pretty much a promise that it's in the red, unless it is Kava here, which I don't even know what that is, so who cares? But we're going to hop into the fundamental news here, some on-chain data for both Bitcoin and Ethereum. I do like to look at this because despite the price action, it is obviously important to kind of take a look at what is happening behind the scenes. days. And when it comes to Bitcoin, the hash rate is still hitting all-time highs here, effectively meaning that more miners than ever are fighting to validate this piece of the network and earn that Bitcoin as a block reward. Now, if we do see prices continue downwards, we may see some forced selling pressure by miners. In fact, let me actually go to Crypto Quant and see how miners are behaving right now. Miner reserve. We're going to check that real quick. I haven't taken a look at that before recording, but I know that above 20,000, they're still in the profit. So I wouldn't imagine, okay, we can't even check right now. I wouldn't imagine that they're selling yet, but I think if we break below 20K and miners go back into the losses on their Bitcoin, that could help us make that move back down to 16.5K. Now we have Bitcoin hash rate hitting all-time highs at the same time that the Ethereum total supply is hitting all-time lows since the merge has gone live. We have now burned off just under 60,000 Ether in the past 176 days. And given the fact that we have seen a lot of on-chain activity, a lot of people shuffling their crypto around and their Ethereum coins such as USDC, this does mean that we have seen an increase in on-chain activity, which does lead to more Ether being burned. So whether Ether is being bought and we see more on-chain activity, or it is being sold and we see more on-chain activity, it does lead to good things for the supply of Ethereum, as we have now seen a burn of just under 60,000 Ethereum, 59.7K to be exact. And this is a big deal if we compare it to what it would have been had Ether still stayed under proof of work, because we can take a look here and see that had Ether been under proof of work, it would have instead had 2 million new Ethereum issued, and this would bring it up to a total supply of 122.5 million. Instead, it currently sits at 120.4 million. So the merge has gone live since last September, and it has already made a massive difference to the tokenomics of Ethereum. Now, with that out of the way, I do want to hop into the news here, because this is very important to be aware of, especially if you're holding your crypto on a centralized exchange. You need to pay attention to what is happening right now. So we did report this last week, how the Silvergate stock crashed after their company delayed their annual report. They delayed their 10K filing as they said they require additional time to perform analysis, record journal entries related to subsequent events, and to complete management's evaluation of internal controls over financial reporting. Now, this was the more concerning quote here, was that they actually cited business and regulatory challenges. The company was weighing how much the changes might affect its ability to continue as a going concern for the 12 months following the issuance of these financial statements. Effectively, they do not know if they can continue operating for the next 12 months, and we reported why this was such a massive concern for the crypto industry, as they served over 750 of the most recognized digital currency exchanges and institutional investors globally. And the names here include Coinbase, Circle, Bitstamp, Kraken, Paxos, as well as Galaxy Digital and Crypto.com. Gemini as well, all of who actually cut ties with Silvergate very shortly after this announcement. So a lot of these crypto exchanges wanted to get ahead of, Silvergate, effectively saying that they did not know if they would be able to continue operating. And the big thing here, the technology that they relied on between Silvergate was actually SEN. So SEN is the Silvergate, what's it called again here? The Silvergate Exchange Network, right? I actually can't find the name anymore, because if we take a look on the website, it is no longer even a web page. They completely removed the web page for this exchange network, and this is exactly what the cryptocurrency exchanges use to actually transfer money from the bank to the centralized exchange and vice versa. It says here, Silvergate's troubles could make Signature pivot in a new direction if there is market share up for grabs. Signature's SEN-like product is Signet, a 24/7 payments network available to commercial clients only. So that is what SEN was meant to do here. It was intended to actually basically just be the way that these exchanges do ramp fiat onto your crypto account for you to actually buy your favorite coins. And now that is no longer an option through Silvergate. And in fact, it's not even an option to bank through Silvergate anymore, as they did in fact announce here on March 8th that they do have the intent to wind down operations and voluntarily liquidate the bank as a whole. So in light of recent industry and regulatory developments, Silvergate believes that an orderly wind down of bank operations and a voluntary liquidation of the bank is the best path forward. The bank's wind down and liquidation plan includes full repayment of all deposits. I'm pretty sure that only means full repayment of all deposits that are insured, and in the US that is up to $250,000 worth. I could be wrong there, but I don't see them actually being able to honor and return all the money that their clients hold with the bank. And if we actually take a look here at the Silvergate Silvergate stock, I mean, it doesn't really look like raising capital is going to be an effective strategy either. So let's take a look at Yahoo Finance here. Silvergate is currently sitting at $2.52 per share. But if we take a look at where this bank was, I mean, it had an all-time high of $204. Back in July of last year, it was at $93. It started the year off at a peak of about $22. I mean, now sitting at $2.52. So that will not even be an effective way for them to raise capital. And yeah, this is definitely going to have some widespread implications on the rest of the crypto market that we have already begun just kind of see unfold here. So following the collapse of Silvergate Capital, we now saw Silicon Valley Bank seized by US after historic failure. They are calling this the largest failure of a financial institution since Washington Mutual collapsed at the height of the financial crisis more than a decade ago in 2008. This is the nation's 16th largest bank, failed after depositors, mostly technology workers and venture capital-backed companies, hurried to withdraw its money this week as anxiety over the bank's health spread. It is the second biggest bank failure in U.S. history, and this bank did have deep ties to Silicon Valley industry startups like we had Airbnb, DoorDash, Dropbox. I mean, this is really bad here, especially when it does come to a lot of these tech startups as well as crypto, as Silicon Valley does have connections with this bank as well. Now, we do see the White House Council of Economic Advisors saying that the banking system is in a fundamentally different place than it was, a decade ago when this started, and the reforms that were put in place back then really provide the kind of resilience that we'd like to see. I mean, you liking to see it is one thing, but obviously this is not the case, as we did see a major run on the bank that put it out of business. And it's kind of ironic because a couple of months ago, we saw a lot of people really concerned about the health of cryptocurrency exchanges. We saw bank runs on multiple exchanges. A lot of these exchanges did not survive. And we actually saw mainstream media taking the opportunity to basically say your money is safe with banks, don't trust these centralized exchanges, completely ignoring the fact that banks effectively do the same thing. They take your money, they loan it out, and if people were to run on any of these banks, I bet the majority of them would in fact go out of business. I don't think any of the banks out there are truly holding all cash on a one-to-one basis, or they wouldn't really be making any other money except through transactions. So at the end of the day, I mean, this is the major flaw in the financial system that is being exposed right now, and we have now seen the second bank go under due to this. So we saw the announcement come out here on Friday, March 10th. Silicon Valley Bank was closed today by the California Department of Financial Protection and Innovation, which appointed the Federal Deposit Insurance Company, the FDIC, as a receiver. All insured depositors will have full access to their insured deposits no later than Monday, March 13th. That is referring to that $250,000 that is insured for every individual account. The FDIC will pay uninsured depositors an advanced dividend within the next week. Uninsured depositors will receive a receivership certificate for the remaining amount of their uninsured funds. So Silicon Valley Bank, that is SVB Financial Group. Let's take a look at how they are doing. Okay, so I think they were actually halted. Their trading was actually halted because, they got force closed by the FDIC there. Or not by the FDIC. They got force closed by the California Department of Financial Protection and Innovation, but people who have money with them are being insured by the FTC. So after hitting an all-time high of $717, they're currently sitting at $106 and no longer trading to the public. So boom, that is the second bank to go out of business in the US in March alone. And then on top of this, we saw a third crypto bank, Signature, sliding on Friday amid troubles at Silicon Valley Bank as well as Silvergate. So Signature Bank here, the shares dropped as much as 32% on Friday. And once again, we can take a look at that here on Yahoo Finance. And this does have to do with what has been going on with Silicon Valley Bank and Silvergate Bank here. Pretty much any bank with crypto right now is experiencing a major bank run as people are scared. And Signature Bank here, after hitting an all-time high of about $345 back in February of 2022, is now sitting at $70 as of market close on Friday. So now that we've given you guys the context, I want to talk about why this is having such a major impact on the crypto market as a whole, and unfortunately why I do think this could get uglier before we see any sort of reversal. So for starters here, Circle, USDC held an undisclosed amount of cash at all three of these banks. You can see here at Signature Bank, Silicon Valley Bank, and Silvergate Bank. Now, we were not aware kind of at the time this news was spreading of just how much cash they were holding, but what we knew was that they had about $8.7 billion of cash held at US regulated financial institutions. So how much of this money was actually being held at Silicon Valley Bank, Silvergate Bank, and Signature Bank, we were not sure. Now, since then, Circle has came out and confirmed just how much cash they are in fact in the hole. It says following the confirmation at the end of today that the wires initiated on Thursday to remove balances that were not yet processed, $3.3 billion worth of the $40 billion of USDC reserves remain at SVB. Like other customers and depositors who relied on Silvergate or Silicon Valley for banking services, Circle calls for continuity of this important bank in the US economy and will follow guidance provided by state and federal regulators. Now, unfortunately, even after confirming that Circle had, I don't want to say minimal exposure, because right here, this confirms that they had about $3.3 billion at Silicon Valley Bank, does not even confirm how much money they held at Silvergate Bank, which has already gone under, or how much they hold at Signature Bank, which is also at risk of going under here. So people are definitely very scared, and following this announcement, we actually saw Coinbase announce they were temporarily pausing USDC to USD conversions over the weekend. Yeah, so if you have any USDC right now held on Coinbase, you are not able to convert any of it back to US dollars and get it back into your bank account. This is scary. Coinbase is now effectively stopping you from selling any of your USDC, converting it back into USD, effectively making it so you cannot withdraw this money, withdraw this stablecoin. And I say stablecoin lightly because we're going to take a look at what has actually happened to USDC in the meantime. We have actually seen it depeg from the dollar for the first time ever, to my knowledge. We saw here a little flash depeg. This was back in 2020 down to about 96 cents, and they quickly did regain that peg not even a couple of days later, but we have now seen the biggest crash in USDC's history, currently sitting at 91 cents. Now, the first thing I thought here was this could create a very interesting arbitrage opportunity, where if you do believe that USDC is going to go back up to $1, that you could effectively buy a bunch at 91 cents and wait for it to remain on peg. But honestly, given what has happened right now in the broader crypto markets, that is personally not a trade that even I would feel very comfortable making. They currently sit at a market cap of $37 billion, and we can take a look at the market cap devastation it has seen in the past couple of months here alone. So back in, let's take a look since June of last year. We can see that it had a market cap of $55 billion worth, now sitting here at $37 billion. Let's take a look at the past 7 days, going down from $43 billion to $37 billion, so losing $6 billion worth of money. A lot of this does have to do with people actually withdrawing their USDC, but now this also has to do with the fact that the actual price of USDC, which is meant to be a stable coin, is no longer stable. And we can take a look at just how big of an implication this will have on the rest of the crypto market. So we can see right now with a market cap of $37 billion and the total crypto market cap sitting at $930 trillion. Right off the bat, Circle itself makes up about, what is this? So that would be about 3%, 3.5% of the total crypto market cap that people no longer trust, okay? And at the same time, we've actually seen massive inflows into Tether. So sort of there's inverse correlation here of just massive amounts of money flowing out of USDC and massive amounts of money flowing into Tether, which so far has pretty much been one of the only stable coins to actually survive this absolute SHIT show that has occurred. We actually saw so many inflows here for a second that even Tether went up to about $1.03. This is wild, to be honest. I've never seen anything like this. These stablecoins are out here trading like volatile assets. USDC falling down to 91 cents. Tether coming up to $1.03 at one point. And to be honest, I think when it comes down to it, for me, plain and simple, I would not be trusting any of my money in these stablecoins. People have asked me multiple times, do you hold any stablecoins? My answer is no. I either hold my money in a bank or I convert it to, or I move it to a centralized exchange to buy crypto. But I never hold any money in stablecoins. And it's honestly just because of what I've seen here, especially in the previous bear market with these projects like USD or TUSD from Terra Luna. I mean, we've seen a lot of these stable coins lose peg at one point or another. And honestly, I don't think it's necessary to hold stable coins when you can just simply hold your cash at an actual bank and then go ahead and move it into crypto if you do want to make any purchases. Obviously, banks do also have their own risk, as we have seen over the past couple of weeks, but at the same time, I think that the risk you take with stablecoins is a lot greater, and you know at least at a bank that a certain percentage of your money is in fact insured. So this is wild to see USDC actually completely losing its peg here down to 91 cents, and the fact that if you are a Coinbase customer, you actually can't even make use of this and go ahead and pretty much convert any of this money back into actual fiat dollars. Now, at the same time this happened, we actually saw a lot of people converting money from USDC back into BUSD, Binance's stablecoin. And this is very interesting. If we go to CoinMarketCap here, you're going to notice if I go to take a look at, sorry, not BNB, we need to go to BUSD, because it was actually announced about a month ago that the SEC was deeming BUSD a security, which makes no sense whatsoever. But now it's kind of weird because people did go ahead and withdraw from BUSD and convert it to USDC, you thinking that that was a safer option, and now it appears that was not the case whatsoever. Not even USDC is safe. So once again, thank you SEC so much for quote unquote protecting investors. I mean, this is just absolutely insane, the fact that they went after BUSD and let USDC slip completely under the table because it is issued by Circle, who is a heavily regulated business, obviously not regulated enough, as we have now seen it collapse as well. And to wrap things up, I do want to talk about Crypto.com here and their exposure to this whole crisis that is happening right now with the banks. And Chris, the CEO of Crypto.com, like an absolute Chad, coming out here and saying that Crypto.com has $0 worth of exposure to Silvergate and to Silicon Valley Bank, effectively meaning if your funds are at Crypto.com at the moment, you are safe. They have no money in either of these banks. Now, this does not mean that they are not partnered up with the banks for their actual deposits and withdrawals. They may have to find a new partner to actually honor getting money from a bank into a centralized exchange. As I think moving forward, a lot of these banks are not going to even want to work with these centralized exchanges, and to be honest, understandably so after what has been going on here. But Crypto.com themselves has none of their funds locked up at these banks. They are not at risk of losing any money due to these banks going under. And if you do use Crypto.com as your exchange, if you have any money on Crypto.com, that is definitely a good piece of news. And that's pretty much the only good piece of news that I can report in today's video, unfortunately, but I did want to fill you guys in on what exactly was going on. And honestly, I want to end it off on this note right here. If you have any money on a centralized exchange, if you have any money in a stablecoin, put it back into cash, put it back in your bank, or put it into a cryptocurrency like Bitcoin, something you want to own for the long run, and move it into cold storage. I do unfortunately think that this crypto contagion is just getting started, so please take the necessary steps to protect your capital. And besides what is happening right now in the markets, I hope that all of you are remaining safe, happy, and healthy. I will be here to update you on all of the news as it does come out. And at this point, I mean, the most we can do is sit back and see what happens next. So without further ado, I hope you guys did enjoy the content in today's video. You know what to do. If you made it all the way to the end, you are an absolute champion. Let me know in the YouTube comments down below and claim that champion status. I am wishing you all an amazing Saturday and an amazing weekend ahead, and I hope to catch you in the next one. Peace out for now.